What's going on, everyone? Happy Thursday. Hope you guys all had a fantastic trading day. Now, if we go back, right? If we go back, we kind of look at the daily chart. Okay, so give me a second here. Let's look at this daily chart. We're going to notice this candlestick here. Okay, yesterday's candlestick was a very large candlestick. I could actually remove these trend lines that I had drawn intraday. But yesterday's price action was very significant because the bulls broke out of a 4-day channel. Okay, so you can see the last time we came down into the rising 20-day moving average, and this is on a daily time frame. We lost that intraday, kind of came back up and reclaimed it, consolidated for 2 days before putting in this next leg up, consolidated for about 4 days, and then we got this little breakout here. So today's candle, we had numbers come out this morning, pre-market. Didn't really shift the market all that much. One thing that I do want to point out, a little bit of a doji candle here. A little bit of an indecision. Now, normally these candles mean one of two things. That is the start of a reversal or a pause candle before the next leg higher. So notice something here. Notice this doji candle, pause candle, following was inside bar day, then we explode. Doji candle, okay? Notice the same kind of candlestick here. Pause candle, 3 days, 4 days higher, okay? Notice this one here. Uh-oh, reversal, everyone's piling into shorts, consolidate for 3 days, go higher. So ultimately what I'm looking at is today's range. And we want to keep eyes on 19,500 to the downside. And we also want to keep eyes on 19,691 to the upside. This is going to be a little bit of a two-sided trade here. Anything below today's price action could definitely pull back a little bit more. But with that being said, if we pull back intraday, we don't close below today's low and we kind of close back up into the range, we could be looking at a pause, a little bit of a rest for the next leg higher and more continuation. Now let's kind of go into some of the setups that presented themselves today, because again, you know, for a lot of traders, it wasn't an easy day, but again, there was areas of opportunity. So I'm going to keep repeating this until I'm blue in the face, but I'm not trading anything off the open. Okay, so I'm sitting out still. I'm still on timeout. It's been working out tremendously for me to do that. It's allowing me to be a little bit more patient, but not only patient, it's allowing me to be more calm, right? Because normally off the open, I'm looking for those pre-market highs. I'm looking for the previous swing low. I'm trying to jump long, jump short. You know, what's the first play of the day? Forget about all that. Okay, so realistically speaking, we got a close under the 20 SMA here at around 655, no confirmation. We got a close back over the 20 SMA at 705 and no confirmation. We got a humongous 51-point range candle here. Now, you guys already know my thought process on candles that are over 35, 45 points. I'm going to take that range of that candle, I'm going to cut it in half, and that's going to be my take profit. So if we're looking at a 50-point candle here, I'm looking for maybe 20 to 25 points to the downside. The low of this candle was 19,586. This candle comes all the way down to 19,534. So you can see here, we would have got bare minimum 25 points plus some. Okay, so at the minimum, we would have taken 20 to 25 points. Now, whether you choose to hold a runner or not is your prerogative, but I don't really have the patience to kind of hold and hold and hold. When I see a setup and it's something that I like to play, I want it to work and I want it to work fast. And if it doesn't work fast, I need to just get the heck out. Because the longer I sit in a trade, I know myself, I start maybe thinking about the reversal. I start thinking about, you know, maybe I'm in a bad entry, or maybe I want to, you know, get out and reevaluate and jump back in. So it's always worked better for me is when something sets up, I need it to go, and typically within the first 5 minutes. Okay, so normally, you know, if I'm in a trade setup, like for example these 20 SMAs, and it's not working in my favor within 5 minutes, I gotta just get out. I understand we're going to use the reason why candle as a stop or maybe half the range, but I've got to get out if it's not working. Now the next setup long here was a 20-point candle. This high price, 19,597, only goes up to 609. Okay, so it only goes up 10 points. Now I could see how someone maybe, you know, is thinking, well, you know, we put in a low, we kind of popped back, we put in a higher low, this is the run. So I can see how someone would get stopped out here. But I could also see how a scalper went in, you know, 1, 2, 3 mini contracts and took 4 or 5 points on the way up, right? And got out while everyone else is getting trapped. So again, you know, you kind of have to figure out who you are as a trader. Are you looking for the quick scalps? Are you looking for more extended moves? If you are looking for a bigger move, then this play is going to stop you out. If you're looking for a quick scalp, then you would have made a little cash on this play. Next play is 38 points. Again, you know, if it's over 35 points, typically my rule of thumb, 9 times out of 10, cut that range in half. So let's call it 40 points. We're looking for 20 points to the downside. I don't even need to do the math. You can see that this would have paid at least 20 points. So we should realistically should have taken 20 points here. We should have taken close to 20 points there. That's 40 points. Most of you guys, most of us, myself, we can kind of call it a day, right? But if you're still one of those people that's looking around for things to trade, you know, there was a long setup here, you know, it kind of, you know, wicked you in and then pulled back and then wicked you back to break even and then, you know, closed under the 20 SMA. This could have also stopped you out. However, there was no confirmation on the follow through candle here, so maybe you held it. Another play here that kind of really did nothing, but you know, if you look at the range, it's 40-point candle, maybe we get 20 points. 19,591, you know, we go all the way up to 19,618. So yes, you would have taken another 20 points there. It would have been a very slow and disgusting and ugly kind of choppy trade. But to everyone out there who's not an evolution traders, who doesn't trade with myself and the team, the majority of our work, the majority of our trading is done that hour before the market opens. Okay, so in here, right? Maybe taking the newsprints, momentum, you know, sometimes we do that, you know, and then, you know, normally these plays that are heading into lunchtime, right? And lunchtime, okay, lunchtime is going to be around here, around this area here, right? So this area here on this downturn is leading into lunchtime. So if you realistically look at it, this candle down here at the lows is at 10 o'clock. This is coming out of lunch. And what did we do? We kind of reversed the move. Now, if I manage to, you know, make some money here or make some money here or make some money here, I'm probably done for the day or very, very close to it, because I know, you know, just being in this business for a long time, the longer we sit around and we wait for more setups and more setups, the bigger the probability is that we're going to give a lot of profits back, or the bigger the probability is we're going to turn a small losing day into a large losing day. And I don't like doing that. I don't like the feeling that I get. I tend to sit and dwell on it all night. I just don't like it. You have to find what works for you as a trader, what time frame works for you as a trader, what, you know, hours of the trading day work for you. And a lot of times for me, it's the first, you know, 1 to 3 hours of the market. And if I catch something there, great. If I'm down, or, you know, I don't make any money, or I'm losing, you know, maybe once in a blue moon, I might try to find one more trade, but realistically, I'm probably going to shut it down too as well. And that's what kind of keeps you in business, and it keeps you, you know, keeps the lights on so you can continue to trade another day tomorrow and the next day and the next day and the next day. You know, as long as you're managing your risk, right, you shouldn't have any problems. It's only when we get hyper focused on trying to make a lot of money, size too large, take that first loss, and then try to avenge everything that just happened, right? And it's typically when you do that, you get very emotional, you tend to go on tilt, and at that point, you're no good to yourself, and you're no good to, you know, your P&L, because you will self-destruct. And you have to understand that is when you feel yourself starting to self-destruct, you've got to lock it in and lock it out. With that being said, hope you guys all enjoy the video. I'll see all of you guys on the trading floor tomorrow. The rest of you guys can continue to work on your craft and get better each and every single day.